Have you ever walked into one of those local bank branches and felt enlightened? In fact, a recent study and a survey uh, done by on major institutions interviewing the sub 30s about banking with your typical local bank, whether it's community bank or major bank, and they said they'd rather go to the dentist, guys, than visit a local branch. Some of them actually never set foot in a bank. Anyways, the reason why I'm bringing this up, one of our M&A banker has brought an opportunity to us to buy a bank. Even though I'm in finance and I've been in finance for the last 25 years or so, managing funds, et cetera, never thought of a bank as a really viable and exciting business. But as I start digging in a little bit, more understanding, the benefit of buying a bank versus actually starting one, because actually when you buy, there's a reason why somebody's selling it. So two things, right? Which reminds me of the old adage. At one point in time, we're looking at utilities. Banking is what you buy, is you buy a moat of a sort. So you buy a license to operate in a highly regulated industry that allows you to leverage deposits. So deposits usually pay 1 to 3% to depositors, and you can lend at 6 to 10%. However, depending on what kind of entrepreneur you are. If you are an extremely high risky guy, probably owning and managing a bank is not for you, because making money owning a bank is not risking capital to the point of a major loss. So if you have the choice between lending to a high risk, high return project versus medium risk, low return, you probably choose the latter, and you should anyways. You're regulated. You're not a venture capitalist. So what are the other ways, perhaps, for transforming a bank into a more of a viable business? One, I never received a call from any of my bankers that enlightened me about a few things. Most of them, they just give you a call, and if you push back, I'm busy or so, they don't call back. So they're not properly really trained to understand your needs and trying to capture market share. So I see an opportunity right there. So maybe you can transform the way not only the bank operates, that's modernizing it, bringing it to the 21st century, et cetera, because all work on outdated systems, et cetera. But what are the businesses that are kind of adjacent to the banks? If you think about an asset management business, private banking business, business naturally of trust. If you own a bank, usually people trust you because you're a regulated entity, but you can also leverage that trust to start offering product and services to your client, depending on what kind of client you end up buying, to kind of increase your margins. Now, why buy a bank versus starting a de novo, they call it, bank? One, I think it takes longer. I think for licensing to go through all these hoops. The advantage is like you're building your own home versus buying another one. So you don't have to deal with any legacy, any problems, any liability, et cetera. So you kind of build a from the ground up, and maybe build it malleable and modular, so it can actually adapt to the future of finance rails, crypto, et cetera. While buying a bank, you may not like what you buy, all of it, or at least you like something, but you have a footprint, you have a client base of a sort, and you pretty much, if you have a solid vision on how to transfer that bank, and you probably need some capital injection along the way. So one is fast, the other one not so fast. However, mind you, this opportunity came to us when we're still looking at it. But if you start from scratch and you want to buy a bank, well, good luck. It's at the process alone, so probably take you 18 months to 24 months, because there's no MLS, like real estate where banks list. Usually it's pretty quiet, and you need to know what exactly you're looking for. And you need to network, and you need to kind of meet the eyes, because most of these small banks, they're not the typical transactional banks. This is probably the one and only transaction they're going to do. So that probably gets a little bit emotional, frothy. The deal may fall through. It's not like you buy in a major bank with major shareholders, publicly traded. So if you submit the right offer, they have actually their duty with the board of directors to look at it I mean, the other way around, even if they have a board of directors, etc., they can just turn it around, and it's probably a bunch of shareholders that control it. So if they don't like you, or if they decide they don't want to sell for now, they probably end up losing 2 years. Anyways, I hope that was enlightening. We will keep you updated as we go through the due diligence so we can actually learn together. Don't forget to subscribe to our channels, and if you have any comments, please link it below so we keep you engaging. Till then, have a wonderful day.